The one connector for everything is going to be technology, right? You can't slow it down, you can't stop the advent of technology. That brings with it two things. One, which is cost, but the second one is growth and opportunity. That's hopefully what the FX industry can embrace today. So there's short-term pain with the technology changes and advancements that we're all experiencing. I spend 70% of my budget at LMAX on technology every year. I wish I had a bigger budget. So there is short-term cost, but the benefits you will see 2015 and beyond through aspirational societies that are looking to trade this major asset class. We see growth from two major segments. One in terms of emerging markets, and the other one is clients coming from other asset classes. Now all of that is down to the market access provided by the great technology that my LPs have, and hopefully that we solidify on the LMAX Exchange. We have to understand the new client has grown up differently to a bunch of us in this room. They grew up with democracy of the internet. They grew up with perfect price discovery in all products, from books to iPhones to FX. There hasn't been a better time for anyone to be a client than right now. They can trade millions of dollars for tens of dollars, right? So 10, 20, 30 bucks to trade $1 million. There's never been a better time to be a client. So, and actually people focus on that cost, but we have to accept as an industry that there is that price discovery, it's going to get better, and there is that access to everyone. It's not expensive for a client to discover the real price of Euro, right, across many public venues, one such as the LMAX Exchange. But the biggest cost of trading to any client is poor execution. Bad fills, slippage, rejections, and requotes. Quite simply, the new marketplace, the new client, won't accept that OTC, random, bilateral method of execution for much longer. They expect transparency, the same transparency they have when they're buying an iPhone or a book. That's the way they're brought up, that's what they understand. So what they're looking for is the openness you get, the firm liquidity you get on exchanges. And I encourage the whole FX market to go that way, because the idea, the principle of last look, rejections, requotes, costs clients money, it does a disservice to the industry, and it doesn't help our health. I try and simplify the whole market into three tranches. There's sales and distribution, there's technology and operational exchanges and platforms, and then there's making prices and risk. And part of that is also the clearing part of the prime brokerage. Someone like us, we haven't got a clue how to make a price or how to run risk, so we don't do it. We give that to the experts. The experts are sitting in the room, all the major banks and the major non-bank liquidity providers. That's what they do. What we do is operate a very efficient, fast exchange that just matches bids and offers. That's all we do. At the front end, you have retail clients, people much better than us, for example, at onboarding those clients. We provide them access to that fast matching engine. So part of that technology evolution is that sure, we can clear for a client. We don't clear for the client, though, the bank clears ultimately. We just provide that market access to the end user. So yes, it helps, and I think it's absolutely fine if some of the major banks take a step back, focus on what they're good at, which is clearing for big institutions and taking risk and making prices, because without that, we haven't got an industry. I think fun, growth, and opportunity, that's it. So, a lot of this year we talked about the lowest volatility in 7 years and 8 years since the Euro launch. So that's been true, but interest rates are starting to move. I say there's whole swathes of the world looking to trade this highly liquid asset class. So I think the last quarter, we're all seeing in September, if we all haven't had our best months of the year, then we've done something that we should pack up and go home. So September is a start. I think Q4, we're looking for that to continue. And I think 2015 and 2016 should be an exciting time for the FX industry, and there's an opportunity for all, and it should be a lot of fun.